Speaking of some terminology, let's discuss some trading terms, guys. We've had a little bit of a discussion on this in the past, talking about some of the basics. If you watch the show on a regular basis, you might run into some terms that are used that you kind of think, what does that mean? Why are they saying this so much? And why on earth don't I understand? So we're going to go through some intermediate trading terms here for you guys. Here comes a few. Let's start things off, Sean, maybe with you, and we'll discuss, 3, 4, 5.
Yeah, so this is a little bit of a, so the first one I'm going to do is PDT. We always hear, this is a little bit, remember, this is intermediate, so we're not going to go too high level here, but we'll talk and make some sense of things. And that's the pattern day trading rule, right? It was developed in 2001. The reason why we have this rule, let's define for first of all what it is. And that is that you can't make you have to make 4 or more. You cannot. You can make 4 trades in 5 days. So that's what that rule is. If you have a margin account in the US, a cash margin account, so not just a cash account, but a margin account, we're able to borrow money, right? So, and the reason why is you're only, first of all, so again, that's 4 trades in 5 days, right? If your account is under $25,000. So the idea is to try to fund it above $25,000 so you don't get classified under PDT, okay? We don't have that here in Canada, but that's what the rule is. And the reason why is back in the .com days, literally IPOs were popping off, similar to today actually, where IPOs start popping off and not just like where, okay, Rivian's price is 68, it comes out at 106, and then you got to sort of play the game. These IPOs were coming out at 68 and running to like $150. So there was a lot of hype and a lot of like sort of excitement around day trading, but the feds, the SEC, and so on and so forth, FINRA, everybody thought that maybe it was getting a little bit overblown. And of course, to protect the trader and the investor, like we need protecting, they said, hey, so you don't get carried away, so you don't blow all that money that you've made, let's put it in the pattern day trading rule. So it limits you from making those, you can 4 or more. So 4 is the maximum that you can do. I was looking this up. Some said 3, but it looks like it's 4. So some people are saying it's 3 trades. I see that in the chat, but for me, I looked it up. I guess it prevents you from making 4 or more. So the maximum you could make is 3. So prevents you from making 4 or more. I must have read that wrong on that page. So 3 trades over 25,000. If your count is over, you're cool. If it's under, then that's what that is. And again, so what that's done for some of us is not allow us really to take advantage of some of these huge runners, because if you know that you only have, and what is a day trade? It's in and out of the same security in one day, right? So as you can see here, it really limits you from playing some of these runners. So that's the first thing there, pattern day trade rule. The fourth is suspension or suspension gets flagged. So you're gonna have to watch out for that, right? So again, that's pattern day trading rule. Find it out. Obviously there, when I was saying 4 or more versus 3, that is what that is. The other one I wanna talk about quickly is float. And people will say, hey, why are they trading that stock? Why is Arun in that? Why is Neil in that? Why is Sean in that? Why are we talking about it? Why is it on our list, right? Well, it's because of float. We have a lot of stocks that are low float stocks, right? And I mean, what a float means is the amount of shares that are outstanding. So when shares go outstanding into the marketplace, for example, on an IPO, they may only release 5 million shares. And what the problem is, if it's at $10 each share, the company's worth $50 million. So and I have Tesla up here on the screen. And what I wanted to show you quickly was it's very, very hard to run a stock up or down, like an AMC or something like that, if you have a really large float. So let's just take, for example, Bank of America. It's not a super expensive stock. We're going to look at BAC here. We're going to call it up, and we're going to see where's the float. So here, here it is. 8 billion shares. So it's going to be hard for retailers, somebody to post something on Reddit or get this stock moving, because retail won't affect it that much. It's only 8 billion shares. Now, sure, you could go in and buy options, things like that, yada, 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 as it goes. But then you're looking at a stock maybe like an MBOT, a name that we've traded today here, and you're going to go and you're going to see this float, 6 million shares on MBOT, right? So again, that float allows it for easier, I don't want to say manipulation. It's just like if people start getting excited to trade some of these names, like an MBOT, like I've been doing today, right? And again, we've made some nice moves, but that's how you get a stock to go from $5 all the way to $9, almost $10 in one day because of the low float. Now, things that can change the float. Obviously, the float does not include restricted shares that may be held by employees or maybe be held by investors during IPO lockup periods. So that's one thing that can affect it. There's also splits that can affect it, either reversed or conditional. And then, of course, there's share offerings, where a stock will come out and want to raise capital. And then what they'll do in that case is add to their float. So some 6 million shares, if MBOC comes out and says, you know what, we want to raise another million shares, we want to raise another $80 million, or $8 million. So they'll go $1 million into the market at $8. Hopefully people will buy them up. The stock will probably fall down on a bad pricing, and that's how it works. So you're looking for low float stocks that will run, but that's how float works.
So I'm going to talk about two things. One is going to be more trade related. It's going to be, I say this often too, when I'm trying to set up some trades, I talk about fading. I'm going to fade this stock. I'm going to fade that. It just essentially means is that when it's coming up to, say, a major level, like in this case, we'll use Facebook, ignoring today, let's just like this. If we're coming up to a major level, like in this case, 345, what I want to do is go against the current trend. If the trend is to the upside and we're coming up into a resistance level, what I'm looking for is a potential short against the current trend. So stock is moving up and moving up well. I'm just looking to fade or go against it and see if I can actually get the stock to rotate back down. So it's just a matter of playing against the grain a little bit. You have to be smart, obviously, on how you time this, because you can either go to the short side, which is what the fading portion is. I sometimes say I'm going to fade this into a long two. That's probably not the right term. I just don't know what the buy side portion of it is. But I know that when I say fade, I'm just looking to play against the grain of the current move, and because it's coming up to support or some major level that I want to work with. So here we are trying to set something up. And then in this case, in Facebook's case for today, if we were trading slowly or if we set something up close to this 345 before we broke it, I would have faded the rally. But given the strength of it, we never went on the short side. And that's, you just got to be smart about how things move. The other one, specifically related to the market as a whole. A lot of the time I come on, I talk about the futures and how they're running and how they're moving. Today is one of those days where we've been moving pretty hard and aggressive in the last little bit. To the upside, though, what I want to pay attention to is circuit breakers. To the downside. We talk about stocks halting all the time because of their conditions, 10% within 5 minutes. They halt, but the market also has a halt condition attached to it. So in the event the futures are down, and let me see if I can actually zoom this in. There we go. This is directly from from New York. The S&P 500 as an index has 3 different circuit breakers. There's one at the 7%, one at the 13%, and one at the 20%. Now, these are obviously to the downside in the event the market were to fall off. And we do have to be aware of this. As strong as the markets are, we have to know what conditions the market will be essentially cut off if we were to fall. At 7%, if we were already hit the 7% marker, and this is not in like a 5-minute condition, it's like as throughout the day, if we were to hit 7% to the sell side, the market would stop trading for 15 minutes, opens back up, goes again. Level 2 halt would be 13%. And then if we ever hit level 3, it'll be 20%. And then at that point, once we hit 20%, done for the day, trading starts again at 9:30. So essentially, markets are open for trading at 9:30. Even though futures have Globex hours, in the event the 20% rule gets hit, we do wait until the following morning, until the stock market as a whole opens before we are open for trading on the future side of things. So I think people should be aware that there are market-wide circuit breakers in place for the futures as a whole, not just individual stocks as well. I think that's something to keep in mind, as sometimes when we start to go to the sell side, this is something that gets brought up a lot more and more. So be aware of what that means.
The PDT rule, of course, is maximum 3 trades in 5 days. So that's how that works. And then again, it resets every 90 days. So a little bit of confusion there, and that's my bad. It was that 4 or more is when you start to get flagged. So what's allowed is the 3 over the 5 days, Brendo.
All right, let's make it an even 5, shall we? Real quick, I'll wrap it up with this one, guys, because we're coming back into earnings season again. And during earnings season, you may hear us say guidance a lot during the show. And that is very, very simply down here, a company's public estimates of its current quarter and futures, or future, not futures as in the market, earnings outlook. So very quick, we gave you PDT, pattern day trade rule. We gave you float. We gave you fade. We gave you a whole bunch of great terms, guys, including earnings guidance or guidance. When we're in earnings season, you're going to hear the word guidance a lot. So there you go, some intermediate trading terms.